On 31st March 2017, the balance sheet of Bir and Divya, who were sharing profit in the ratio of 3:1, was as follows. Balance sheet as at 31st 3 2017. Liabilities asset creditors. Employee Provident Fund. Employee Provident Fund is a special note. The amount payable to the employee. That's why to be mentioned the new balance sheet. Don't distribute the provident fund. Then investment fluctuation fund and general reserve. Investment fluctuation fund and general reserve. Accumulated profit, the portion of profit, accumulated profit, those amount to be distributed to old partner in OPR. Then capital, here they are given cash at bank, debtors less provision stock. Then here the important note they are given investment 5 lakh, but the market value is 4,40,000. Market value 4,40,000. Listen, investment 5 lakh, then the market value 4,40,000. It means 60,000 value is less. The 60,000 is lost. Here the investment rate out of 1 lakh and we deduct 60,000. Remaining 40,000 to be distributed to partner. Then adjustment what are they given here? They decided to admit Weber and April 1, 2017 for 1/5 share. Weber shall bring capital rupees 80,000. Additional amount, right? Capital. The 80,000 capital. The old partner will share in old profit sharing ratio. Then stock was overvalued by 20,000. Stock was overvalued by 20,000. Okay. Here what they are given the stock? Here they are given the stock 3 lakh. It's overvalued. Now it will be reduced. Its loss bar as that's why it will be deducted. Revaluation account will be mentioned the debit side. Then a debtor who was rupees 5,000 were written off bad debts, paid rupees 4,000 in full settlement. Already write off 5,000. Now we receive 4,000. It's gain for us. Revaluation account, credit side. 2 months salary payable. It's expenditure. It's loss for us. Monthly 6,000. 2 months 12,000 is loss for us. Next, Weber was bring his capital to extent of 1/5 of the total capital. The question over how to be solve the problem. First to be prepared revaluation account. First to be prepared revaluation account. Revaluation account, debit side, credit side. Debit side will be mentioned all the losses. Credit side will be mentioned all the gain, all the profit here. Here credit only one credit. Bad debts 5,000 already write off. Now we received 4,000. It's gain for us. That's why here mentioned in the credit side. Then stock overvalued. Now it will be reduced. What is the value here? 20,000. Then salary. Outstanding capital. What is the balance? 28,000. The 28,000 lost. The 28,000 will be distributed to old partner in OPR. Old partner in OPR. Other OPR 3:1. How do we find out here? Listen, 3:1. 3:1. 3/4 into 28,000. 21,000. Then 1/4 into 28,000. What is the value here? 7,000. Okay. Revaluation loss will be transferred to where? Profit and loss account will be transferred to profit and loss. Got the next one. Next account need to be prepare the balance sheet here. Next account will be prepare the capital account, partner capital account. Here also debit side and the credit side. Debit and the credit. Credit side will be mentioned the benefit for the partner. Credit side benefit for the partner. Debit side loss and expenditure for the partner. Loss and expenditure part. Go through the old balance sheet. Here old balance sheet they are given capital. Listen, they are given Abir capital 6 lakh. Divya capital 4 lakh, 6 lakh, 4 lakh. Opening balance, balance brought down. Balance brought down 6 lakh, 4 lakh. What else? Any undistributed profit, the accumulated profit, any accumulated profit, they are given the old balance sheet. It will be distributed to old partner in OPR. Old partner in OPR. What they are given here? Investment fluctuation fund. Investment fluctuation fund 1 lakh. Out of 1 lakh, here investment 5 lakh, market value 4 lakh 40,000. 60,000 value is less. 60,000 value goes down. Last 60,000. Here out of 1 lakh, 60,000 will be compensate that investment value falls down. What is the remaining? 1 lakh minus 60,000, remaining 40,000. The 40,000 distributed to the 40,000 distributed to old partner in OPR. What is the old partner? Abir and Divya. What is OPR? 3 is to 1. 30,000, 10,000. Then investment flex. Then general reserve. What is the general reserve? 1 lakh 20,000. The general reserve transferred to old partner Abir and Divya in OPR. The OPR 3 is to 1. 1 lakh 20,000. 1 lakh 20,000 will be distributed to 3 is to 1 ratio. 3 by 4 into 1 lakh 20,000 into 1 lakh 20,000, 90,000, 30,000. 90,000 and 30,000. What else? Gain a new partner that bring the goodwill. What the goodwill? 80,000. It will be taken by, it will be shared by the old partner in gaining ratio. Here in the sum, gaining ratio and OPR both are same. Gaining ratio and OPR same. Here goodwill premium by goodwill. Goodwill account. What is 80,000 will be distributed by old partner in OPR. What is the OPR? 3 is to 1. 3 by 4 into 80,000. Again here 1 by 4 into 80,000, 20,000. What else? Then here revaluation loss. What is the revaluation loss? Here revaluation loss here they are given 21,000, 7,000. The loss, listen, any gain, any benefit will be mentioned the credit side. Any loss will be recorded in debit side. Revaluation loss for Abir 21,000, for Divya 7,000. Divya 7,000. King, then capital account over. Then when we find out the balance amount. When we find out the balance amount, we do the total for credit and debit. Total of credit. Total of credit 7,80,000 for Abir. For Divya, what is the total of Divya? Here 4,60,000. 4,60,000. 7,80,000. 4,60,000. We find out the balance amount. So what is the balance amount for Abir and Divya? Abir and Divya. Listen here. What is the balance amount here? 7,80,000 minus 21,000. 7,80,000 minus 21,000. 7,59,000. For Divya, total credit 4,60,000. 4,60,000 minus 7 lakh. Minus 7 lakh. 4,53,000. 4,53,000. Then when we find out the Weber capital, Weber how much amount bring? Here they are given. Look at the question. Look at the question. In the question here they are given. Weber was bring in capital to extent of 1/5 of the total capital. We don't know the total capital. The total capital they bring 1 by 5. Listen here. Assume that the capital is 1. Assume that capital is 1. But the Weber capital they are given 1 by 5. 1 by 5. What is the remaining capital? Remaining capital 1 minus 1 by 5. 1 minus 1 by 5. What is the value of 1 by 1, 1 by 1 minus 1 by 5. So what is the answer here? Listen, 1 by 5 minus 1 minus 1 minus here 1 by 1 minus 1 by 5. Here only be convert the denominator and numerator by 5. What we'll do? Only be multiply by 5. Okay, 5 by 5 minus 1 by 5. 5 by 5 minus 1 by 5. Okay, here 5 minus 1, 4 by 5. What is the answer here? 4 by 5. What is the answer? 4 by 5. Here, what is the total of remaining partners? What is the total of remaining partners? Abir and Divya. Abir and Divya, the total is equal to 2. Is equal to 2. 4 by 5. Then we find out total. Here, what is the total? The total capital of Abir and Divya, 7,59,000 plus 4,53,000. What is the total here? 12,12,000. Here, 12,12,000. 4 by 5. A 4 by 5 is equal to 12,12,000. What about the total profit? What about the total capital? When we find out total capital equals 4 by 5, right? Maybe put opposite side. 5 by 4 into 12 lakh 12,000. 12 lakh 12,000. We will get total capital. What is the total capital? 5 by 4 into 12 lakh 12,000. What is the value here? 15 lakh 15,000. 15 lakh 15,000. 15 lakh 15,000 is total capital. What is the capital of a bid? The capital of a bid here they are given 1 by 5. 1 by 5. Here we bid capital. We will bring the cash. What is the value here? 1 by 5. 1 by 5 of 15 lakh 15,000. 15 lakh 15,000 into 1 by 5. 1 divided by 5. So what is the answer? 3 lakh 3,000. 15 lakh 15,000. 15 lakh 15,000 into 1 divided by 3. So what is the answer here? 3 lakh 3,000. Okay. 15 lakh 15,000 divided by 5. 3 lakh 3,000. Okay. Next. Okay. The balance carried down. Okay. Bid capital credit side nothing. So that's going to be a total for bid in credit side and the debit side. Debit side nil. The entire amount is balance carried down. Balance carried down. So what is the next step? Next step will be prepare the balance sheet. Next step will be prepare balance sheet, asset, liabilities. Liabilities, asset. So whatever they are given here, first will be consider the capital. First will be consider the capital. So what is the value for capital? The capital. Look at the capital ledger. Look at the capital ledger. Here they are given. Abid capital 7,59,000. Divya capital 4,53,000. Vibir capital 3,03,000. 3,03,000 would be mentioned here. The next one, look at the old balance sheet. Look at the old balance sheet. Here the old balance sheet, employee provident fund. How much? 1 lakh. It's not distributed to the partner. Same will be considered. Employee provident fund. Employee provident fund 1 lakh will be mentioned here. Then creditors. Creditors, it's no adjustment in any adjustment is not there. We consider the same value. Creditor 2,20,000. Then outstanding liabilities. In the adjustment they are given outstanding salary. So monthly 6,000, 2 month 12,000. 2 month 12,000 will be mentioned. Then whatever they are given here will be considered all the adjustment. But the first one cash. How do we consider the cash? Listen student. Here cash rate. How do we mention the cash? Look at the old balance sheet. Look at the old balance sheet. Old balance sheet cash at bank 1,40,000. What is the value here? Here they are given 1,40,000. We mention here cash. How do we find out here? Cash 1,40,000. 1,40,000 plus the bad debts recoverable cash, right? How much amount received? 4,000 plus the new partner bring goodwill amount 80,000. Goodwill amount 80,000 plus the goodwill. Apart from the goodwill, the new partner bring the capital. What is the value here? 1/5 of total capital, right? What is 1/5 of the capital? 3,03,000. 3,03,000 will be mentioned here. The total 5,27,000. Total 5,27,000. What is the next one? Debtors. We mentioned the debtor. No adjustment. No adjustment in the debtor. Consider the same value. Stock. What is the stock value? Old balance sheet. The stock that mentioned 3 lakh minus the over value 20,000 now to be reduced. Here 2,80,000. Next. So what is the next one? The next one, investment. Investment they are given 5 lakh. But the market value they are given only 4,40,000. We mentioned here 4,40,000. 4,40,000. Then so remaining all is recorded. Now we do the total for both side, asset and liability side. What is the total of both side, asset and liability side? Total of asset 18,47,000. Total of liabilities 18,47,000. Student, any doubt, any clarification? Any doubt, any clarification? Okay. Next question. Listen. Following the balance sheet of Aruna, Karuna, and Varuna as on 31st March 2020, who have agreed to share the profit and losses in their profit in their capital ratio. Listen here. Here only we change the partner name. Okay, Kavinisa, Abhirami, and Sarmila. Listen. Following the balance sheet of Kavinisa, Abhirami, Sarmila on 31st March 2020, who have agreed to share the profit and losses in their profit sharing ratio. Right here, liabilities asset side, land and building, machinery, closing stock, debtors, less provision, cash at bank. Liability side, capital, Kavinisa, Abhirami, Sarmila, general reserve, workman compensation fund, general reserve. What they are given? Important point. Following the balance sheet of Kavinisa, Abhirami, Sarmila on 31st March 2020, who have agreed to share the profit and losses. Listen, who have agreed to share the profit and losses. Share the profit and losses in proportionate of their capital. Proportionate of capital. It means as per the capital. What the profit sharing ratio? Kavinisa 4 lakh, Abhirami 6 lakh, Sarmila 4 lakh. It means remove all the 50. 4:3:2. 4:3:2. 4:3:2 means again it will be simplify 2:3:2. What is the profit sharing ratio? As per the capital 4 lakh, 6 lakh, 2 lakh. Be simplified. What is the answer? 2:3:2. Then what they are given other information? General reserve, workman compensation fund. General reserve and workman compensation will be distributed to the old partner in OPR, sundry creditors. Then what they are given here? On March 2021, Kavinisa decided to retain the firm and the remaining partner decided to carry on the business. It was agreed to revalue the assets and reassess the liabilities on the debt on the following basis. A land and building be appreciated by, listen, what is the land and building? Here they are given land and building 4 lakh. Land and building be appreciated by 30%. So open question for all. The value of land and building was appreciated. It's gain for us or it's loss for us? Land
Gain
and
for us, sir.
very good, very good. It's gain for us. Listen, student, very simple logic. All the gain where we mention, do we mention the credit side of revaluation account? Why? Because nominal account rule. Debit all expenditure, credit all income. Then machinery values is depreciated. Machinery is depreciated by 20%. Its loss or income. Depreciated,
Loss, sir.
loss, loss, debit side. There were bad debts. Bad debts means bad debts,
Loss.
loss. Bad debts, loss. The claim on account of workman compensation fund was estimated. The claim, its expenditure. Claim is in a expenditure. How do we prepare the revaluation account? Here, we prepare the revaluation account. Prepare two side revaluation account. Revaluation account, debit side and the credit side. Particulars amount here, particulars amount. Okay, here credit side all the plus mean all the gain would be mentioned in debit side. All the gain would be recorded in credit side. All the expenditure or all the losses would be recorded in debit side. But the first one, land and building appreciated 30%. What is the value for land and building? 4 lakh. 30% in 4 lakh. Do we mention here? Buy land and building. Why would we mention the credit side? Because gain. Whenever the land and building value is increased, it's gain for us. That's when we mention here. How much percentage? 30 percentage. 30 by 100 into 4 lakh. Into 4 lakh. What is the value here? 1 lakh 40,000. 1 lakh 40,000. What is the second one? Machinery value depreciated by 20 percentage. What is the value of machinery? 6 lakh. 20 percentage on 6 lakh. 20 percentage on 6 lakh. Going to be mentioned here to machinery. 20 percentage. 20 by 100 into 6 lakh. Into 6 lakh. What is the value here? 1 lakh 20,000. What is the value here? 1 lakh 20,000. What is the third one? Bad debts 34,000. Listen, student, here they are given the bad debts. But the bad debts, listen here. Here debtors 2,20,000. Debtors 2,20,000 less provision. Already we deducted 20,000. Already we deducted 20,000. Now here they are mentioned. What is the value here? 34,000. Out of 34, listen, student. Total value 34. Out of 34, already we deducted 20,000. Already we deducted 20,000. What is the remaining? Remaining 14,000 is extra loss. The remaining 14,000 to be mentioned here. Bad dates. Okay. Here it's loss, right? All the losses where we mentioned all the losses will be mentioned in debit side. All the losses will be mentioned in the debit side. Listen. Here to bad debts. To bad debts. What is the value here? 14,000. Bad debts 14,000. Now we find out the remaining value. Now we find out the remaining value. Okay, how do we find out the balance? Let me do the total for debit and credit. This is total for debit and credit. What is the total of credit? Total of credit 1,20,000. Here, what is the total of debit? Total of debit. Listen, total of debit here 1,20,000 plus 14. 1,34,000. The value here 1,34,000. 1,34,000. What is the total here? 1,20,000. 1,20,000. What is the balance amount? 1,34,000 minus 1,20,000. Balance amount 14,000. Do we mention here? Profit and loss account by profit and loss account. Profit and loss account 14,000. The 14,000 to be distributed to old partner in OPR, distributed to old partner in OPR. What is the OPR? Here they are not given the OPR. Here they are given OPR based on the capital proportionate. What is the capital proportionate? 4 is to 6 is to 4. It means 2 is to 3 is to 2. 2 is to 3 is to 2. The profit here right distributed to. Here the remaining amount will be distributed to 4 is to 3 is to here 4 is to 3 is to 2. 4 by 7 into 14,000. Again here 3 by 7 into 14,000. Again here 4 by 7 into 14,000. Okay, what is it here? 14,000. Listen, how do we distribute that? Last 4 is to 4 is to 3 is to 4. It means 2 plus 4 plus here 2 plus 3 plus 2. 2 plus 3 plus 2. 2 by 7, 3 by 7, 2 by 7. 2 by 7 into 14,000. Again 3 by 7 into 14,000. Again here 2 by 7 into 14,000. 4,000, 6,000, 4,000. Student, any doubt, any clarification? Any doubt, any clarification?
No doubt, sir.
Okay, next question, dissolution account. Okay, they are given. Give the necessary journal entries. Give the necessary journal entry for the following transaction of dissolution of the firm of Akash and Revant. Akash and Revant on 31st March 2016 after the value, after the various assets other than cash and third party liabilities have been transferred to realization account. They had profit and losses in the ratio of 3:2. What they are given here? Profit sharing ratio 3:2. Revant was to get a remuneration. Revant was to get a remuneration of rupees 46,000 for completing the dissolution process. He also agreed to pay realization expenses. Realization expenses rupees 20,000 were paid by Revant. Paid by Revant from the foam cash. From the foam cash. What is the journal entry? Listen. Whenever the cash is goes out, whenever the cash is goes out, cash account credit, cash account credit. Any realization account, any expenditure, the particular expenditure account debit. Listen here. Here realization account is paid for what? On behalf of Raven. On behalf of Raven. Here Raven want to get a remuneration. What's the value here? 46,000. What is the journal entry here? Journal entry. Raven's account debit. Raven's account debit. Raven's account debit. How much amount? 46,000. 46,000 to realization account credit. To listen to realization account credit. To realization account credit. Listen. Yes, sorry. So all the realization account is a nominal account. What is the rule for nominal account? Debit all the expenditure and the credit. Here, Raven get benefit. The Raven what get a remuneration 46,000 separate entry. The 20,000 paid rate is a separate entry. Here, realization account. Realization account. Debit 46,000 to Raven the account. To Raven the account. Credit Raven account credit 46,000. Being realization expenditure. Realization expenditure payable to Raven. Payable to Raven. First entry. Second entry, listen. Second entry, the amount paid to realization expenses, right, on behalf of Raven. The 20,000 cash is goes out. Whenever the cash goes out, cash account credit here on behalf of Raven. That's why Raven account debit. 20,000 to cash account credit to cash account credit to cash account credit to cash account credit 20,000 being realization expenses paid for Raven. Next, for the next journal entry, the second here they are given Akash, an old customer. Akash, an old customer who want to account rupees 1,20,000 was written off bad debt in previous year, paid 90%. Listen here. Akash, an old customer who account rupees 1,20,000 was written off as bad debt in previous year, paid 90%. Akash, right? Change the name. Agilan. Okay, Agilan, an old customer. It's already write off. What you will here? 1,20,000. Out of 1,20,000, now we received 90%. Whatever is write off, now we received the money. The money is gain for us. So that's why any amount received, cash account debit, cash account or bank account debit, How much amount received? 1,20,000. 1,20,000. 90%. 90% of 1,20,000. 90 by 100 into 1,20,000 into 1,20,000. 1,08,000. Received for whom? Bad debts already received for the bad debts. Okay, treated as realization account. Realization account credit. Any amount received or paid will be treated as realization account. Because being, let me mention as being bad debts is recovered. Go to the next one. So next to the third last journal. Here they are given right here. Creditor of rupees 80,000. Accepted furniture value at rupees 76,000 in full settlement. Listen, whenever the creditor accepted any asset, no journal entry. No journal entry. Next one. Land and building was sold for rupees 6 lakh through a broker who charged 2% commission. 2% commission. Okay.